we've talked about, I think one of the themes here is making times to make the changes that, I mean, you have to have a vision, but that march you towards your vision.
Yeah.
And we've talked about, CPAs, bankers, HR, I'm just attorneys, IT people, regulatory compliance people.
Yeah.
If you're talking to a nascent company, been around maybe a year and a half, maybe they're all of a sudden doing 200,000 a year, which is not
Yeah.
great, but they didn't expect that.
Yeah.
Where would you start? What would be your highest priority to get right?
Yeah. So, putting aside the question of what are you trying to accomplish, because we beat that one to
Well,
death.
no,
to this
we've got
point.
that. Yeah.
Yeah. So the next question I'm really asking is, I'm starting to look at how they got to that point. And so when you're sort of in that startup phase, you have to, it's a lot of bootstrapping. It's a lot of scraping by. And so I don't want to say you take shortcuts, but it's the path of least resistance for a lot of things. But when you start to find success, that's a good opportunity to start to fix some of the things that maybe are a little precarious in how you got there, right? So you want to start trading risk for stability. So what are the things that are on the table that you can take off that are going to reduce your exposure going forward, right? So maybe you have some compliance matters that you need to attend to. Maybe you're not quite sure if you're registered in all the places that you need to be. That's a time that it's a great opportunity to start looking at that, because for you to make that next leap from where you're at in sort of that startup phase to the true growth phase of a business, you need to make sure that things are solid. Because there's this saying, it's a rule. It's the rule of 3 and 10, meaning that as you multiply things from 1 to 3, 3 to 10, 10 to 30, 30 to 100, whether it's people or dollars, things start to break. And so if you think about it, like if you're one person doing something, right? It's pretty easy to do. You don't have to communicate anything. It's just you doing it. As soon as you add more people to do it, so you have 2 people doing it and you're reviewing it, well, now you have a lot more communication. The process you had as a single person doing that doesn't work anymore, because now you have more people involved. You have to deal with the communication of it. You have to deal with how that person is doing it. You now have review. And so things start to break as you get bigger. And so the way to do that is you have to start removing the risk that exists within your processes and within your compliance structure and start optimizing it in a way that sort of is more stable. That is going to allow you to make the next growth. So I would start looking at sort of poking some holes in some of the things that had gotten to this point. I'd also want to review, obviously, the financial statements. That's the biggest one, because most likely what I've seen with businesses at that level is they're not very accurate. What often happens is business owners have this really good idea of like, they know what the business is doing because, they're spending the dollars, they're seeing every dollar come in. They have a very innate understanding of what's happening, but it can get off base very quickly. And what ends up happening is you start to correct the financials, you start to fix them, the P&L, the balance sheet, and the reality of what the situation is starts to differ from what the business owners thought it was. And then there's this reconciliation that has to happen. I'll use an example. I recently started working with a client. They've been around a couple years. And like last year, basically they didn't have any books. They got to the end of the year and they gave their tax accountant all the statements and they just booked entries at the end of the year. And this company in a couple years, they got up to 30 million. So not exactly your 200,000, but they were up pretty big. So can you imagine like having no financial records and doing $30 million in revenue? So he comes to me, says like, hey, I need financials. This was a couple months ago. I need financials.
My bank wants them.
Yeah, is exactly right. My bank needs them. I need to get a loan.
Or the bonding company.
Yeah, I need to get a loan. That was the answer. And I was like, okay, yeah, sure. Let's do this. So we start working on it. The difference between what he thought his results were and where we actually are is huge. And so much of what we're doing right now is getting him to trust the numbers, because he's like, well, what do you mean my profits are 6%? They're 12 to 20%. I was like, that's not what the numbers are telling us. And he's like, well, no, that can't be. And I go, well, we've reconciled every account. We've recorded every transaction. Here is all the detail. If you don't believe this, like show me what is wrong. I'm happy to be wrong. I'm not trying to say I'm not perfect, but like the numbers are the numbers. If they balance and we've accounted for everything, where's the discrepancy? And so we're coming up on week 2 of basically somewhat having to negotiate with him on getting him to understand that like these are the actual numbers, right? And that's part of the problem is you have a couple years of growth. You think you know what your situation is. Now we start actually cleaning things up. We start taking risk off the table, and now you get a better understanding. It's difficult for business owners to come to terms with that sometimes.
Wow. That's a crazy example.
And unfortunately,
I think,
more common than you would think.
I say common is dirt. Yeah. I mean, I make this statement frequently, and I'm sticking with it. 90% of the businesses in the United States, and there are 30 million of them, do not know if they made a profit last month, last quarter, or last year. They don't know.
Yeah.
yeah,
And there are lots of reasons, booking deposits and cost of goods sold and not making entries in cash basis accounting and poor matching. It doesn't matter, but they don't know.
They don't
But
know.
they do look at that bank app, and then they
Right.
try to think, well, I owe so and so and so
Yeah.
and so, but they forgot the payroll taxes. And anyway, you can do that if it's just you.
Yeah.
But you
Yeah.
can't do it as you begin to grow.